Hello, 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 Maryann Method Podcast. Welcome, welcome. I'm your host, Maryann. And as you all know, this podcast has been launched or birthed because we are very passionate about making sure that we tell everyone some of the things that we have missed out while we were in the military. So, investing in what matters is what we're going to talk about in my podcast. As you know, I'm your host, Maryann, and today we have a guest who is truly understanding of what it means to be mission capable. In this show, we focus on the intersection of wealth and wellness, showing you how we leverage tactical assets like your VA entitlement while maintaining the internal readiness to enjoy the legacy you're building. Because we're not trying to grind all day, every day, so that we don't get to enjoy what we're working hard now, right? So I would like for you guys to welcome my dear friend, my family, Sean Arnold Lee from Mitten Mortgage Lending. And we have been trusted partners. Oh my gosh, Sean, for like probably what, 5 years now?
Yeah, it's been a long time, but a good time. And I think
Quite a
that
long
second
time. We
part
have,
is always
I mean, if
best.
we can write a book about real estate stuff, I mean, we could write a book. We have stories for everything. But I want you guys to welcome him because he is my, no kidding, trusted lender. Helps all of my clients here in Florida, Texas, and all of the other states that he's licensed in. But we mostly work with Texas and Florida clients, but he is one of the most respected loan officers in the nation. He works hand in hand and direct. When I say direct, he has homie hookups, right? With United Wholesale Mortgage, which is one of the biggest lender in the nation. And he's got experience after experience over 2 decades. He used to work for Rocket Mortgage in the VP sales department. And now he works with Mitten Mortgage Lending, more so a local lender, which I love because we get to flex so much for our clients to bring the biggest bang for our bucks, right? So I will turn it over to Sean so he can give you a little bit of intro, what he's all about, and then we're going to dive right into our topic today. Sean, your turn.
Absolutely. Well, thanks so much, Marianne. As I say, long time and a good time. And we've been able to become really good friends, throughout the time that we've been working together. And I often say, like, that transpires to our clients as well. Like, we
Mhm.
have quite a few clients that we maintain contact with, not from a mortgage perspective or even from a finance perspective, but just a true friendship. So, if, at all anything that you'll get out of this, you're going to get a ton of finance information that's going to certainly help you, on your journey to what your financial freedom picture is, right? But along with that, we're going to be a friend along the way, right?
Yes.
So I've been, as Marianne, you were saying, like, I've been in the industry a long time, literally a long time. Started on at Rocket Mortgage, was a couple different positions there. I actually started as a processor, then I was a former exception underwriter, which is actually really important to a lot of the things that you and I work through just with PCSing active duty military members. We got some veterans with unique situations, right? And knowing the guidelines helps, but knowing when you can challenge the guidelines is even more
Mm-hmm.
important, right?
Yes,
So
yes, yes.
so we do a lot of that. Then I moved over. Used to work on what was called our high net worth channel, right? So working with famous clients. I've had some clients that have won Super Bowls, NBA championship, World Series, right? I have one that's won a Stanley Cup, right? And it's being able to work with clients like that allows you to see what are the rich people doing, right? Like what makes them have so much money, right? And I'm sure you'd be interested to play stories we can tell you. But needless to say, did that for about 3, 4 years, expanded that channel. And then I moved over and started, originating on a banking side as a senior director of mortgage banking, right? So I didn't always have that position, right? That was just developed over time and being there so long and growing in each and every facet that I'd done at the company. That's where I ended with them. And then since then, I've actually moved over to what's called the broker channel now. Reason for my move, people always ask me this, right? I have an 8 and 11-year-old. Well, they're 8 and 11 now, right? At the time that I moved, they were three. I want to say 3 and 6 or 4 and 7. But for me, part of my own personal financial growth is not just being financially free, right? But having that freedom with my kids, right? And that was something that this channel allows me to do all the while being able to give my clients not only a better experience, but a more cost friendly,
Yes.
experience, right? So some of the rates that we can get on this side versus what you have to get on
Mhm.
a retail side, some of the programs that we have, being able to have, we've been doing a lot of what are called buy downs. I'm not going to get into specifics there. We'll talk about that, I'm sure, down the road. But being able to give our clientele interest rates at 2% below market for the
Mhm.
first 2 years, helping guide or break them into their new mortgage. These are things that just some of these retail banks don't have, right? So for me, making the move for both family time and then giving my clients more buying power, right? More financial power. It's been a good move, and then you get to meet great people as always, such as yourself. That's never a bummer, right?
Yes. Awesome. Well, I appreciate that, quick intro. And in that, moment, you were able to basically give us your credentials per se, right? So, Sean, I've kind of talked to you about like what our audience is all about, right? You are being, exposed to the military family, right? So I'm partnered with AFSA, Air Force Sergeants Association, and I am so honored, humbled, and blessed to be a part of this Summit 365 podcast, thing that we're doing this year. So you're actually my first guest. So I wanted to
Let's
have
go.
you as my first guest because we are in a phase of what we call very, very vulnerable state in the real estate industry. There's a lot of people scared. There's a lot of people nervous. There's a lot of people like, I don't know about all this stuff, right? So, but before we get into that whole thing, my focus today is to have a conversation with you about some of the things that we have done together, right? You've helped me and my clients so much, especially the people who are transitioning from active duty to into retirement, right? The big
Yeah.
question that we get oftentimes is, Marianne, Sean, do I buy a home before I retire so I can use my active duty income as a source income that you can qualify me for? Or do I need to wait until I retire so you can leverage or I can leverage my disability rating per se if you expect to get one? But then again, the problem with that is that you can't count my active duty income, right? So that's going to be the big elephant in the room today, Sean. So I would like for us to kind of do a deep dive on that because a lot of our audience or a lot of our listeners, our members are probably asking those questions, right? So give me, no kidding, some of the scenarios we've done together. And in your humble opinion, what would be the best course of action? Obviously, it's going to be different for every single one, but kind of like go over some of the scenarios we've done before where we've used active duty income and then also use some of that retirement projected benefits and all the things, right? So let's go ahead and get into it. So when someone asks us a question, all right, I'm transitioning in the next year, right? I would like to buy a home, but I don't want to be limited in my budget because this is going to be my retirement home, right? And let's just go ahead and use the scenario that this person has not used their VA entitlement, right? As you
Sure.
all know, VA entitlement, there's no limit when you haven't used your VA entitlement. So let's dig into that. What would be the no kidding answer that we would normally give when we get asked that question?
Yep. So I often say, like, there's a lot of gray area when it comes to the VA loans because everything goes by what's called a selling guide. The most common answer you're going to get, and this is from every bank, is that I can't use your income
Mm-hmm.
until you retire because we can't prove continuance of the income.
Mm-hmm.
While I can understand that answer, that's not true, right? So we've actually had an exact situation like this. I'll share the story here shortly, but just to give our listeners, an idea, anytime you're active duty, and a lot of times you're going to see this with just like the ETS date on a LES,
Mm-hmm.
if you will, or pay stub, right?
Mm-hmm.
So on the LES, there's an ETS date.
Mm-hmm.
For most of our active duty military members that are retiring out, a lot of times they're going to hit, that time period where that ETS date I believe it now is going to show indefinite, right?
Right.
That's actually changed too, just in the
Correct.
last, 18 months. But whenever it shows indefinite, right? Well, that tells us that that income's actually going to continue. I could straight up use that if I wanted to, and I didn't want to dive deeper, but I like to give our clients absolute certainty that like when we qualify these, you will close, short of you buying a Lamborghini or a yacht, right? Doing
Mhm.
something outside the norm, right? As long as you're following along with us and accepting that guidance that we're going to give you, you will close. So the way I look at it is we actually have two options in this situation, right? I could qualify with the active duty income and that's fine. Or I could choose to qualify with the retirement income as well. We need only explain that we have these two options per the selling guide or per the VA handbook, if you will. They're going to make us use the lesser of the two. A lot of times for our retiring military members, right, their retirement pay is actually going to be higher if they're in the process or have already been confirmed with their disability paperwork, right? So disability does play a lot into that. But let's just play both cases. If I was to qualify and let's say we can't guarantee that we're going to get the disability income, let's say we're using strictly the retirement pay. Most of our military veterans, they can either go to their commanding officer, right, and get a letter just confirming what that retirement pay is going to be. That's actually fairly easy to do, but sometimes your commanding officer might be a brigadier general. So sometimes if you have to go to somebody who's super high up, right, you can get a lot of this information right off of your own VA portal. If you submitted for retirement, right, that VA portal, it will give you information needed to show what your projected retirement pay is going to be based on your current rate ranking, if you will, in the military, right? And we can use that as usable income, right? Now, couple that with if you were getting disability income, right? We can use the disability income as well, so long as you're receiving it. Added caveat to the disability income, and this is what a lot of veterans may not be aware of, is that disability income is non-taxable, right? Now our veterans know that, but I'm allowed to use actually 125% of that number. That 25% is what they call gross up, and that is usable income for the profile or for the VA mortgage, right? So there's various different ways. The example I would give you is we had a military veteran, Green Beret, if you will, retiring out of the military. His situation a little bit unique in a sense that he was getting a new build. Sometimes this happens, but this is both my commitment to Maryann and our clientele base, right? Is that sometimes we're going to work on VA loans where maybe the builder does have certain incentives that aren't granted to an outside lender.
Mhm.
This was the situation in this case. So our client retiring out had been working with builder's lender because they didn't allow an outside lender. And lo and behold, he packs up his U-Haul. This was a power lifter, right? So you can imagine how much weight equipment that he packed up in a U-Haul that he had already started driving 8 hours into the trip. Calls me 8 hours into the trip and says, Sean, they denied me, right? They denied me
This is like a week, the week of
closing.
the estimated closing date, like literally that Friday, right? And then Monday, that's when the builder's lender notified me and my buyer that they had been denied because they could not choose the income that they initially qualified him for, right? But we've been through this whole scenario so many times before. So
Yeah.
I already knew what was going to happen, right? But I let it play out because this particular builder, they don't allow outside lender. And if I use an outside lender, I don't get to maximize and leverage all the incentives that they were giving my buyer that I have negotiated, right? So I had to let it play out. But in that time frame, I was also working behind the scenes with Sean. Right. I was
Yeah.
telling my buyer, let's get all the stuff submitted with Sean. Sean, let's get the underwriter to take a look at this. Sean, I need, like, no kidding, the underwriter to already pre approve this in the event this stuff happens, right?
Yep.
Lo and behold, I got that phone call. I am on the phone with Sean and I'm like, my freaking buyers packed up. Like they're literally like 8 hours into their drive because they're supposed to close this Friday. What can we do? And then boom, Sean obviously, came to the rescue. But go ahead and tell the story. I just had to like intervene with
Oh
that
yeah.
because
No,
it was
this.
so freaking nerve wracking, man. It was just crazy. And I knew the builder could not do it. I told them from day one that they cannot do it, but they said, no, we could do it. and if I just want to curse, right? I'm trying to
Yeah.
like, you know, keep this colorful words within me, but I'm like, I knew it. But you know what? What I fought for was like, hey, I already have a lender who is on standby, but you're going to give me every single thing that we've discussed in this contract using him. And then go ahead, Sean. What did you do, sir? Please,
Yeah.
please,
So we
brag about what you've done for this family because it is one of those things that I've not seen before.
he was a real good guy, and I mean, this is you're talking a cross country trip, right? Colorado to Florida, right? So it's not
Mhm.
a short ride. So I got that call on a it was a Friday or Monday, and I'm going from memory, but needless to say, we're talking on Monday. We had to put some things in motion. Number one, Marianne jumped in right away and was like, "Hey, because in this sense, there was already an appraisal done. So we got to get an appraisal transferred, right? VA has a case number that goes with, that's assigned to the home, basically, right? So, Marianne, you were working your magic. You were able to get that appraisal case number
Oh
transferred
my
over to us.
gosh. Hey, I
So,
forgot about that part. Oh my God.
yeah.
I'm calling the appraisal on a weekend. I'm like, please come on Monday. I need this done. Yes.
Yes. So we got that fast forward, and then our client too. Like we stored everything on file. We had been working with the client for about 60 days prior,
Yeah.
and we were kind of prepped just in case this happened, right? So in our sense, for him, it was a matter of like I got to get an updated LES. Okay, I could still use the same retirement form that we were using, and then the same disability paperwork, right? Added caveat to this too. So not only did we get this done, it was a Thursday close. We ended up moving it to Friday morning, just in lieu of this time frame, right? But from start to finish, when that call came in
Yeah.
to close, was a record time. 7 days, seven
Yes.
days from start to finish on VA loan. And he originally was going to close with a VA funding fee because they couldn't get it registered. The veteran and I, we called the VA Regional Loan Center. We did that on Tuesday, and we got a good rep there. And if you do this a lot of times, which I spend time doing this is the best advantage that I can give my veterans who are in a pre discharge disability claim, right? Well, it just so happens that the individual that we got on the phone with the regional loan center had marked it a status on his certificate of eligibility, which is super important, which was SC with monthly award, right? And what that basically means is that not only did he get a lower interest rate with this, not only did Marianne negotiate us getting the same incentives that they were going to give him to the denied client, got it transferred over to us. We also closed him with no funding fee, which on a loan this size saves about $15,000 in loan value. Now,
Mhm.
granted, he could go back later with his discharge claim that he has pending and he could get that reallocated, but that's so much harder than to just get it on this deal, which
Uh-huh.
is what we got. So, super excited for him. All around good dude. And just this was one that we had to earn that trust, and that came in just the 60 days, right? And then delivering, that's the icing on the cake, right? Cherry on the top.
It was. And then here's another plot twist to that, right? So, talking about trust, planting that seed of trust, right? I truly take huge pride in building my real estate business because of my military sphere of influence, right? I've been so blessed, and that's why I'm able to thrive to actually help families, buy or sell their homes, not only here in Florida, but all 50 states, right? But the thing about that whole trust thing, it was tough in the beginning because he also has had a lender, a prior special forces experience that was no kidding. This was his battle buddy, right? That was also in the industry. So trying to navigate through those waters that, hey, I don't know your dude, but I know mine. I know mine has closed very many of this type of scenarios. I don't know what type of experience your battle buddy has, not trying to like, put shade on him, but I know I can speak for what Sean has done for me and my clients, right? And in the end, it actually worked out because, I mean, talk about like burning the midnight oil. That was quite stressful, man, because I
Yeah.
really hate it when my family gets put in situations like that. That now I'm like, oh my God, my family's going to be homeless. I'm like, Sean, we got to get them in a house, because we
Yes.
had all of the B&B settled for a certain date, and then this stuff happened like last minute. It was crazy. But reeling it back to our scenario, right? To answer that initial question that we talked about, right? So, what is the proper answer to that question? It truly depends on the client's needs, right? So if
Yeah.
we've got a client that want to go all out and be bougie about this retirement home, and we know that we're going to be limited or might not count all of the income that they have, because as you heard Sean, we will have to count the lesser of the income that they have, right? Then, that scenario might not work out for you. Then that scenario might be like, hey, you know what? Let's buy, before you retire, because most lenders, or all lenders, I should say, they're going to require a verification of
Verification.
your
Yeah.
job for at least 12 months, right? So it truly depends, right? But we have all scenarios for you, right? It just depends on how you envision what that retirement looks like. Now, if your retirement is like, hey, I'm not trying to be house poor, please just count, because we had those family too, right? Hey,
Yeah.
don't count my stuff. Don't count my wife's income. Don't count my disability income. Just count the one that I'm about to get. We actually had, clients that were coming from Europe that had that scenario, right? So we
Yeah.
entertained that scenario, and then we kind of waited a little bit, because some people's like, hey, I don't want to pay no VA funding fee for that much money,
Yeah.
especially here in Florida. Our median income here for where my military family loves to actually buy, and the house that they love, they're not cheap, right? We're talking about $500,000 or
Yeah.
more, right? Because, I mean, I'll call it bougie. Most of my military families are bougie, and as they should, right? Because they have
They earned it.
deserved it all these years that they've been grinding all day, every day for the military. This is their time, right? So I don't blame them. But we also talk about, hey, we don't want to be house poor, because now you're in Florida. I mean, there's so many things to do out here. So we don't want to be tied to a mortgage that's going to kill you, not be able to enjoy what this whole podcast is all about, right? Investing in
Sure.
what matters, and investing that you get to actually enjoy what you had invested 20 years, 24 years, 25, 30 years, right? So thank you so much for explaining that. Now, let's dive into the next question that most of our people are probably wondering. This whole VA funding fee, right? So, let's talk about that piece, Sean, because a lot of people, I'm not going to try to point no fingers why we were not educated on this stuff while we were active
Yeah.
duty, right? A lot of people think that VA actually lend them the loans. And I'm like, no, no, it don't work like that. VA does not have money like that. Guarantees your loan. VA guarantees 25% of your loan. That's why bankers love VA buyers, right? Because
Yes.
they know if stuff was to hit the fan, that VA is going to at least pay 25% of that loan, right? If it doesn't go well. But now a lot of my families, especially first time home buyers, VA, I'm not supposed to even have nothing come out of my pocket at all. I'm like, all right, let's break it down. Let's break down the fees that are expected if you're on the buyer's side, especially for my first time home buyers. What is this VA funding fee all about? How can we get that waived, right? And what are, no kidding, the expectation in this industry as far as like, hey, you're the buyer, you're expected to pay this. But if you have a unicorn realtor like me, you might not have to pay those, right? Because it's all about the negotiating ninja tactics that every realtor should have, but there's only one me, right? So let's talk about
Sure.
that, son.
Absolutely. So this is literally one of my most favorite reasons in working with you. Like, you know your clients, you know your area, which is extremely important, right? And you know how to market, and you got connections, right?
Mhm.
And these are all, so many things that add into you being a unicorn realtor. Like, they don't unicorn's one of a kind. I mean, that couldn't be more true than what you see, right? So I always say, like, when it comes to, what you're asking about the funding fee, I'll roll through all those. The easiest thing is our veterans here that I can finance 100%. I can go zero down, right? And that is true. You can actually go zero down, right? But there are going to be some inherent cost, right, that are involved in the transaction, right? These are standard. It wouldn't matter whether you do, I'll be VA specific here shortly, but there's some standard costs that whether you go VA conventional, etc., you're paying these anyways. Number one, traditionally you're going to have an underwriting fee, right? Got to pay an underwriter to issue a clear to close. that's going to fully underwrite the file and give us the thumbs up, right? Those are going to vary lender to lender. For most wholesalers, it's going to be between 1,000 and 1,500 bucks. If you work with the right folks, a lot of times we take care of that for you,
Hmm.
right? So those are some things that we're able to do on our side to make things a little bit friendlier, more cost efficient
Right.
for our veterans. Other standard costs that these are kind of considered third party, you're going to have an appraiser, right? The appraiser needs to get paid to go out to the home, assess it, give you a true value of the home based on the market, and then also let you know if this home's in good working or good standing order. Depending on the purchase price, the price of the price or cost of the appraisal will vary. Most of the time, you're going to see that between nowadays between 650 to $850. Like that's the cost of living has went up. The appraisals have reflected that too. You'll have a credit report. Credit report standards needed on any loan that we write, VA, conventional, FHA, doesn't matter. But those are things that if it's a individual, you're probably looking at 150, 175 bucks. If you're looking as far as like a joint, so married couple, then you're going to be closer to like 200, 250, right? Other than that, you're always going to have title work, right? And title work is something, even if you were paying cash for the home anyways, you're still going to have title work because they have to show or demonstrate that the title, this is the home, is free and clear of any errant liens, whether that's a tax lien, a mechanics lien, an HOA lien. Sometimes you can see those too. But you want this, right? And standard title costs between $3,000 and $4,000 depending on purchase price, right? So right there, if we're adding those up, right, we got about another 6 grand between title, appraisal, underwriting. That has to be covered. And that's just from a loan cost perspective, right? Then when you swing over to I say the right hand side because I'm, more envisioning this
Left.
as a loan estimate.
Hmm.
You have your loan cost on your left hand side. On your right hand side, you have your what are called other costs. I
Right.
don't like the terminology of other costs because they're not costs. It's going to be taxes and insurance, right? So if you were buying the home in cash, you would still have these quote unquote other costs right hand side
Yeah.
of the loan estimate
Hmm.
anyways, right? What this is you're going to have in Florida, there's transfer taxes. Transfer taxes are paid. There's a portion the seller covers. There's a portion that the buyer is
Hmm.
responsible for, right?
Cool.
That is predicated upon purchase price. It can
Right.
vary from 2 grand all the way up to 5 grand to 6 grand sometimes, right? And there's no limit on it. It is truly based on the purchase price
Purchase price.
that you'll have regardless of loan or not. Then you have your taxes and insurance. Now, if you're a disabled veteran, this side of the transaction is going to be more cost effective, more cost efficient. If you are 100% disabled, that I can qualify you.
Right.
Unlike most lenders or retail banks out there, I can qualify you with a disability tax exemption waiver. So that means we don't have to front load an escrow account because of the way your taxes are paid, right? So we'll save a little money there. But again, these are the other costs that if you were not a disabled veteran or not a 100% disabled veteran where you'd have a property tax exemption, we have to set money aside in an account so that way we have enough money to pay the county when those taxes are due. Those taxes come due in November.
Hmm.
So if we close in June, we got to pay them a full year's worth of taxes in November. And I would have only collected from June pretty much through October. That's 5 months. We owe them 12, right? So we got to front load some of these things, right? So you could be looking at, 10, I typically say 5 to 10 grand, right? Is kind of a number that I use for most of our veterans. And then that is coupled with you need to be working with Maryann Unicorn Realtor. These type of deals don't happen unless you have somebody that's working for you on your side of the transaction. How do those things happen? I mean, I'll give you kind of a sneak preview. You'll be able to kind of, provide more value in this sense, but getting seller concessions, right? Credits. That's the big ticket item, and that comes with knowing the market. I don't know if you want to speak more to that,
Yeah.
but
Right.
so
Yep. So all of those fees that he talked about, those are no kidding, like by law, we have to
yeah,
pay, right? So transitioning from that, before I kind of talk about what I can do for you and what I take pride in when it comes to negotiating a deal for my buyers. So my veterans can, no kidding, buy a house with almost zero down, right? Or zero out of pocket, I should say, not down.
sure,
Zero out of pocket or very little, right? So the only really fee that you're going to be worrying about when you're working with me is the fact that, hey, we got upfront inspection, right? Inspection is the
yeah,
only thing that, hey, you know what? You want this house and you want that have to have that peace of mind. Yes, absolutely, right? And honestly, with a VA, transaction, the only inspection that we really need is the WDO inspection, which is the wood destroying organism inspection, aka termite inspection. That's the only thing that the VA required. That costs you maybe 125. But when I talk about inspections, I always discuss the different kinds that's out there to give you that peace of mind. Whether that's a 4-point inspection, especially for a pre-owned home, a scope inspection for a brand new build because you don't know what kind of stuff are in your pipes. Next thing you know, you flush and there's sewage coming back into your house, right? Little things like that, So, those are the things that literally inspection fees, the only one that you will have to come out of pocket per se. Going back to some of those fees that you talk about, Sean, I want our audience to know because a lot of them are probably not very, very well versed in reading those fees, right? Especially when you're dealing with a builder, right? Because you look at that sheet, you're like, what the heck are all these fees, right? And I know
Yeah.
that the VA does a very good job in protecting our consumers, right? Talk to me about those junk fees that we can challenge,
Yes.
because like one thing I love about Sean, y'all, for all of you guys that are listening, one, he is always about the veterans. He's always about how can I give back? What can I waive? What can I ask the actual lender to give me, like him, so I can buy down a rate for my veteran without costing them anything, right? I can waive their appraisal. I can waive this and that and all the things, right? When you're working with big bankers, you don't necessarily get that. What they show you the fees are, and be careful out there. I'm not just talking about new builders. I'm not saying they're bad because I sell a lot of good builders. But what I love about Sean's is the fact that, hey, Sean, I need you to look at this lender sheet. What are we getting bamboozled on, right? What fees did they
Yeah.
add on here that they're not supposed to add because they're junk fees? And technically, my clients are protected by the VA to challenge that and not have to pay for those fees. What are some of the examples of junk fees that we need to be looking for?
Yeah, so this is a great question. That's because VA does provide protection for junk fees. They really do. Unfortunately, there are, and I don't say this for everybody, but there are some bad actors out there that will just basically read into what does VA consider a junk fee, right? And
Mhm.
then they'll still have the fee there. It'll be called something different that is VA compliant, right?
Mhm.
Some of these things that you're going to see processing fee,
Mhm.
we don't charge all of our processing's in house. We don't charge a processing fee. Min fee, that's a big one. Right? You'll see that will appear and these are fees that will appear in section A on a loan estimate. So
Mhm.
processing fee, you got admin fee. You're gonna have, gosh, I'm just thinking of like I had one what I forgot what they called it, but it was like another $1,200 that didn't need like there was no reason for it. And ultimately why it's important to keep track of these junk fees, right? Junk fees aren't going to you, the veteran. They're not going to you, Marianne, as far as a realtor. You don't see any of these. Junk fees
Mhm.
are going to
Lender.
the lender, right? And for me, like what I do as a broker, I don't like I'm not beholden to any particular lender. I'm beholden to my client, right? So
Right.
if I can work with 25 different lenders if I want to, but in all reality, it's going to come down to who's going to give
The biggest
my
bang.
client or our client the best bang for their buck, right? Which doesn't necessarily transpire to the best interest rate, right? Every lender can get every interest rate under the market, but each
Right.
interest rate has a different cost, right?
Cost.
So where is our veteran going to recoup some of these costs? Is it worth it? Like you'll see some things out here, Marianne, are like, hey, I can get you a 475.
Right.
Sure. But if you're not
Yeah,
paying
close to
attention, you
25 grand.
yeah, if you're not looking at
You
Section 8,
know.
you're paying 20 grand.
Yeah.
And these are costs that you're never going to recoup, right?
Right.
Big two big fees, processing and admin. Those are the two most common. You'll see some other fees sometimes that they might call it something different in-house. All of these will appear under origination because they have to be disclosed as that, as
Mhm.
origination, right? So I guess my best example is I can give you this, right? You'll have plenty of folks that say, hey, we're going to give you, I'll use this as an example, Marianne, like, because we deal with this sometimes on builders lenders. This is why you and I work a lot together, is because I'm here to oversee some of those. Even if they don't allow an outside lender, Marianne's still getting these to me to look over. This is the service that, her clientele will get, that's free of charge, right?
Yes.
Whether you move forward with myself or you have to stay with the builder's lender, you still, as a veteran, deserve to get a good deal and not be
Correct.
taken advantage of, right? So let's
Yep.
say builder's lender says, hey, I'm going to give you $15,000 for
Correct.
concessions or otherwise credits. As a veteran, like you're doing this maybe for the second, third, fourth time. We do have some veterans might be doing it for the 10th time, but either way, you're not doing it for a living, right? So this sounds fantastic to you. And you're like, oh, great. I'm not going to have to, bring $15,000 into closing. That's great. However, you get your fees and cost worksheet and you're getting the same interest rate, but you're being charged $15,000 in points, right? So this same perceived value of the 15 grand in credits, right? Did it actually result in that? And in that example, the answer would be no, right? That's not to say every builder does that. We've worked with plenty of builders who are just given a great deal. And
Yes.
we tell our clients that, right? But
To
we've
go with them.
also
Right.
yeah, and we've also been able to actually get some clients who go back, they get a better deal with the builder, or
Yeah.
you, Marianne, working your magic's like, listen, like you're going to charge my client this anyways. You're giving my client the same incentives, but it's going to be with my lender because
Correct.
we've compared, and my lender's a whole percent better, a half percent better, or
Right.
$5,000 better in cost for the same rate, right? So these are things that could be negotiated on. And it all comes down to what you talk about, right? Trust, right?
Yeah.
You have to work with somebody you trust so you can take that opinion and know that you're going in good faith.
Correct. And you know what? With that said, also to all of our listeners out there, I know nobody likes to share their financial information, right? Because it's a sensitive info, sensitive data, going back to that trust again, right? So that's why I've been so blessed and successful in this business because that trust was planted 24 years ago, right? So when I talk about overnight success, my overnight success took 24 years, right? So when I get referred a client, because that's how I have built my business in this industry, strictly referral, I start with that because I know how sensitive financial info is with everyone, right? So that's why I only work with a handful of lenders, and Sean being one of my really top tier favorite of my clients because I'll give them the option and almost always Sean will get them because of his character and what he does for my people and then truly, giving them the best course of action, right? Because Sean does not have to close the deal for that specific client. If he can't beat that rate, he will tell you, Mariann, I'm sorry. I tried my best. I can't do it. I can't do it.
Yeah.
Go with that builder. I've looked at all of their, lender sheet and everything checked out. You're not getting bamboozled. Boom. That's all I need, right? But that's what I love about Sean is because he will bend backwards, put in the time, look at all of this stuff for my people to make sure that we're not getting bamboozled, right? Because I sell houses for a living, right? That's what he does. He sells basically loans for a living, right? I might not
Yes.
know the process, pretty much what goes in and out on how to buy a home because we have worked so many years together and I already know the process, but I will never step in that role because I'm not one licensed. And number two, I don't want to really, get into people's money, things like that. Right. So, but going back to that, statement about our listeners, and if you're on the buying side, this is not the time to hide stuff from your lender. I
Yes.
promise you, whatever you don't want to share, it's gonna show up. It's gonna show up. Whether you were late for a freaking payment for 30 days, whether, man, I forgot to like disclose that I had this going on, all the things, right? I mean, we had a scenario. Oh my God. Remember that scenario when we were, I'm trying to help like a client, in North Carolina. And oh my gosh, we were on the selling side actually. And then
Yeah.
the buyer forgot to disclose because somehow, any debt to IRS don't necessarily show in your credit report like that,
That's
right?
true.
Until
Yeah.
it's no kidding, we're about to freaking close this loan, right? No kidding. We were once again like I said, I could write a book about the stuff that we've been through. Oh my gosh, our buyer, I was representing the sellers. Our buyer, we were about to close, showed up in their stuff, final underwriting stuff that the lender had to do. The buyer owed IRS like $240,000 for the last freaking 10 years. It was just crazy. It was crazy. So that closing got extended. for another 30 days. Then it got extended again for another 30 days. Now, mind you, we had to close on their house in North Carolina and they were buying a house here in Florida. So I had to help on both deals because they were buying an $800,000 home here, but they can't close on that loan until that house closes. And then we had this issue with the buyer. And then she was also selling her house where she was going to get the money to pay the debt to IRS. Okay. And I'm not going to even try to like put that lady's business out there. But, sometimes the professional, clients and people are out there are the ones that are really bad with their money, right? This particular one was a lawyer, and it's like, how are you doing this and owed IRS money, right? But at the end of the day, we made it through, but it was such a pain on both sides for my buyers here who are selling their house here and for the sellers that we were buying their house here. I mean, it was just a whole kind of craziness. But the point I'm trying to make is the fact that please don't hide nothing from them. I don't necessarily know all the details that goes on in every single transaction, but don't hide nothing from your loan officer, okay? Because they're gonna find out. So, whether you want to close this loan or not, or you're trying to get out of a deal that sometimes happens. We had another client where what? We were on this $850,000 loan, right? And we were like 30 days to close. And then that sequestration happened when President Trump just took over and then he cut all of the government
Yep.
positions. Yeah. And $75,000 was on the line for my client
Yes.
to actually get their money back to cancel this deal. It was like another tug of war that I had to do with the lender. I mean, not the lender, with the builder because they were trying to keep the 7K because
Yeah.
the builder's actual statement for me and my buyers, like, we don't care what's going on in the White House and the government. At the end of the day, this had no financing contingency. I said, I don't think you know who you're working with because I'm representing the veteran and I had to pull all of the laws that protected my clients. At the end of the day, it took a lot of work for me for a deal to fall through. And all this work, I've been working with them for almost 8 months building this house, right? And for it to like fall through and not really, I mean, really, we don't get paid until it closes, right?
I
But at
was
the end of the day, still doing the right thing for the veterans because that is a lot of money and I got all of their money back. So I just
such
wanted to
a
put that
true
caveat out
story.
there. Yeah.
The and so and just for our folks that are listening, right? Here's the crazy part is like I mean, as far as being in the industry for a long time, right? Like many different partnerships. I work across multiple states, right? So I work with a lot of realtors, right? I promise you most realtors won't go that far.
Hmm.
What I mean by that is like you were in that situation fighting to get your military veterans money back to not buy a home, which means you've spent 8 months of your time with no paycheck. And I don't say the no paycheck part because that's the only reason we do it. If it was the only reason we do it, you would have left it when it didn't work and
Right.
said, hey, get your money back, figure it out, right? But that's just not our style. That goes along with the trust, right? Whether you close or not, we're still entrusted to put our best foot forward for you, right? Both
Correct.
financially and ethically, which would be that ethically portion, right? So,
Yes.
and like it is in an industry where it's so hard to find trust, ethical people, right?
Yes.
When you do find them, stick with them, right? Like most folks like I will always say, and I think you hit this earlier in our podcast here, right? If I can't beat it, I'm just gonna tell you, right? Just like and here's an interesting statistic that was told to me, and this is when I was working at Rocket Mortgage for that matter, right? 90% of this is just consumers in general, but 90% of consumers are either asking for the wrong mortgage or in the wrong mortgage, right?
Hmm.
Interesting statistic. Now, this was many years ago. I don't know how true that still holds today, right? But it allowed me to open my eyes to this is that most of our clients that we work with, they're going to come in, they have an idea behind what financing would look like to them, which is great. I love having that because that's an opportunity to educate. So for me, that's great. You have an idea on what you want, right?
Yeah, and that's what I love about you. You always present the options, right? And then we both kind of like mastermind this, right? When we have a challenging task at hand, we're like, okay, what kind of scenarios are we running with this, right? Because believe it or not, this is a team effort, right? But you're not gonna most likely see a team effort like what we're showing you here, because most of the time, most of the realtors that you probably have worked with before, that you've actually met before, they stay in their lane. They won't even know how to read that, settlement statement for you, right? But you're not going to get that from me, because I'm very intrusive, respectfully, in that manner, because I want to know what my clients need to know, right? So in the event that they, hey, Maryann, what's box A, line whatever mean, right? I'm able to kind of like explain. If I don't know, I'll reach out to Sean and be like, hey, Sean, I'm not understanding this. Why are we getting charged this? Why is this fee there? Or whatever the case may be, right? And then, like he said, those options. Yeah, some people, especially if you're coming from overseas, or you actually offloaded a house and you've got this much equity, a lot of people mindset in the military, I want to put all that money in my house because I want my monthly payment to be like this, right? Allow the lender, right? Especially if you're working with Sean, he's going to be creative with it. I call him my freaking wizard, okay? My lender wizard, because I don't know how he does it, but we had another scenario where I had a client, man, bless their hearts. They're such beautiful people. But sometimes life is lifing on a lot of us, right? And sometimes, divorce, separation, I mean, all the things happen in people's lives, right? And it could have happened like 3 years ago and that's still haunting them, right? Some of the stuff that, hey, you know what? I did not know I missed a payment here that brought my credit score here, all the things. We had one client, Sean, how many 90-day late payments they had? And I don't even know how the heck we closed on that house. Child support payments, court payments, all the freaking crazy things, right? That regular family go through. Yeah, 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 yes, yes. That'll be another session, talk about credit. Yep, yeah. And I got him a pool home. It was crazy. It was crazy. It was crazy. But like, we're about to wrap up here, because me and Sean can talk all day, because we're so passionate about what we do and how we can actually help veterans leverage their VA entitlement and all the things, right? We're going to have another session here with Sean. We're going to talk about down payment assistance, whether that's good, whether that's bad. We're going to talk about credit. We're going to talk about the things, like, no kidding, the top 3 non-negotiables that you need to be doing as part of your main instinct, so you always have the buying power in this nation. Okay. I don't care if you have two, $300,000 in your bank, but if your credit score is like 500, there's not much we can do, unless obviously you're gonna buy a $300,000 homes, right? But as you guys know, all across the nation, it's very, very hard to find that home these days, right? So that's gonna be another session we're gonna table, because there's so many things to talk about that involves anything lending. Okay. But to kind of wrap it up, Sean, right? Our initial topic was basically mainly on, should we buy a home before or after retirement, right? I want you to kind of just capture that in, like, the next minute or so, on what truly is the answer. As we know, we already said that it's going to be dependent on you, what your needs are. But if you can give some tips about, hey, if you want to leverage me counting these incomes, then obviously you go before you retire, right? But if you would rather save VA funding fee and all of the things, then obviously you're gonna go with after the retirement. But also kind of touch on what a what the veterans can also present to you as another source of income, especially if they're planning to work right away, right? That salary letter, what needs to be on there, the start date, the salary that you're gonna get paid, and all the things. We've done those before too, where we qualified someone based on a letter, and no kidding, after they close the house, they quit that job, right? So, those kind of things, just to kind of wrap it up. Yeah. Correct. Yes, absolutely. Yes. So that's a beautiful, summary of what we're trying to capture here. I know we've had a few tangents here and there, but they were all very relevant to what we were talking about in this podcast topic today. So, Sean, would you like to share your information just in case they want to hit you up? How can they get a hold of you? The best way to get a hold of you. Sean is old school. He's not really very involved with social media like that. So go ahead and share how they can contact you, Sean. That's right. Yes, absolutely. Yeah, we don't necessarily have 8, 10 to 6 hours like most people in this industry work off of. Yes, we do say, hey, you know what? We got to have our own time as well. But we know that we are in this business, not for the money, but in this business to make sure that we facilitate our clients the best way we can in the best possible way because they are investing in the biggest purchase of their lives, right? That's why I always tell my clients, I'm like, if there is something that is burning you as far as questions or concerns or whatever, please text me, call me, or whatever. If I am up in that moment, I will answer the phone. I will call you back. I will text you back. But in the event I passed out because I'm tired, I will call you the next morning, right? That's the type of service that you're going to get from both of us. So I would like to wrap it up here. And I want to thank you so much for tuning in. Thank you, Sean, for I know you're very busy for actually, volunteering your time to help our veterans, our military community, our civilian community, all the things that AFSA Summit 365 is all about for helping us understand a little bit some of the mortgage and lending questions and concerns and thoughts and all the things that we kind of discussed today. But this is not the last time that you're going to see Sean because there's still so much to talk about, right? Right here in the Maryann method, where investing in what you need matters. Okay. So until then, see you next time. Ciao.